Good day. Ira Epstein with your agriculture wrap-up, and this is for Tuesday, and we are sitting here now on February 11th, 2020, and we're about 2:15 in the afternoon. So we had today the USDA report of ending supplies in the U.S. and the world, and as you can see, other than wheat, which took it on the chin, the other markets here were pretty stable. Corn down 2 cents, beans up a half a cent, but wheat down 10 cents. The market got hit. Today's also Tuesday, and I had talked yesterday at great length about the phenomena of called a Tuesday reversal, when you get a strong Monday to the upside in a market or a very weak Monday to the downside. And if you start taking a look around, the only market that was lagging today was the stock indices, which I wrote about in my morning update. I said it's the only one fighting that. Well, it's not fighting it anymore. It too, is giving that in. In the energy markets, we've gone into a stall. Now, what do I mean by a stall? The markets have just sort of flattened out here. The good news, and it was surprising, is that in the corn market, when we come over here, even though it's down 2 cents, the government said they're going to use 50 million more bushels a year for ethanol. It didn't have much of an impact. The fleet on that was so fast. So as we take a look at soybeans, we can see that we're up for the week, and it's only Tuesday, but we're up 2 3/4 cents. The bias of the market is still down, and on rallies, I would expect that wherever that 18-week moving average of closes comes in, that'll be a resistance point. I've left the breakout numbers that occurred for this leg down, and as I've said to you repeatedly, the market's now in a stall. If it should take out this low, we have to be careful, and the low that I'm talking about is this day right here. So that low is 868 3/4. The market seems to be finding some support against that, but so far not a reason to lift up in any manner, and obviously until China gets they call it, I think, the COVID-19 now. They've renamed it from coronavirus, giving it its own name. I think I'm correct on that. I'd be watching to see what happens. When we look at the swing lines, they're pointing up. So you have a market with higher lows and higher highs. That's the definition of a market that's gone into an uptrend, but you filter that. And what I filter it with is the 18-day moving average of closes. When you're under the 18-day average, the bias is down. So even though the swing line's up, the bias is down, the two wash at each other. It means that if you should rally further, the potential for getting to resistance at 894, that 18-day average, is all I'm looking for at this point in time. When I look at Bollinger Bands, we had that breakout. Remember the other chart that I showed you back here? We had the breakout. You came down. Now what I'm looking to see is what the market does, and what it had done is it stayed under that Bollinger Band for 5 days or so, moved to the right-hand side, and then kept itself going down. Well, this was extreme, this isn't. When you get to the left-hand side on a decline of the Bollinger Band, you only stay out of them 95% of the time you stay in them, 5% of the time out of them. And if you'll recall, I give you how to count those over and over. I'm not going to do it again. What each day's value is worth worked out pretty well, actually. When I look at momentum is saying something different than price. Momentum is confirming that the market momentum to the downside has been lost, and that price should reach up to the 18-day average. It does not have to, but you lost the embedded reading back here. This is when both numbers of this are going sideways under 20. When it's lost, and it was lost right here, and this was yesterday, the only time you can get that back is the very next day, which would have been today. Instead of doing that, the market confirmed further that it stays lost. So I am looking as a chartist for price in the 18-day average to get together. Now, should the market close over 894 1/4, you then could turn the bias up in the market. So I think the bears have to defend that position. Close over 894 1/4, my bias will turn up, my momentum will have been up, and the swing line's up. Could we be looking at big up number there? Well, anything's possible, but first let's see what it does at that 18-day average if it gets there. In the meal market, let's take a look at the same phenomena. This was Friday's close. This is yesterday. Obviously, the market made its run at the 18-day average. It all happened in one day, but more times than not, it's not in the same day. But now that the market got there, all I'm looking for is the market has hit its upside target. This is what I'm talking about in soybeans, stalled itself today. You've lost the downside momentum. You're in an oversold market, not trending. You have here the higher high and a lower low in those numbers. Soy oil, still to me, I wouldn't be surprised if it makes a run at the 18-day average. It certainly got close. I think you'd agree with me that the high here of 31.96 versus 32.03 could be getting close to that. What number did it hit? The 18-day average of closes. That's all it owed when it lost the embedded reading. It's the closest of one of the major moving averages. On this chart, I have two of them, the 100-day and the 18. So it got there and stalled. If it goes up again, it wouldn't surprise me if the 18 becomes the resistance point. What is the trend? Down. Lower highs, lower lows. But you're oversold. So if you want to get a bit of a rally here, it wouldn't surprise me to see the resistance between the 18 and the 100-day average. In the corn market, you keep failing at this 18-day average of closes, not going anywhere from it. I don't see a trend. I see a market with a lower low and a higher high in an oversold condition. Frankly, don't know what to do with that. In the corn market, you broke the uptrend the other day when you got down here. You're oversold. You have failed repeatedly at the 18-day average of closes. The Bollinger Band was just hit today. So I'm looking for support between the lower Bollinger Band and the 100-day average. That's where I think the pros began today taking profit off the market. If they get further follow through, I'll be surprised if they don't finish up right there. I don't see anything bullish here. I see an oversold market without a trend, but in a collapsing state. In the sugar market, start looking at the end of the month for sugar to put in a seasonal top. It often does that into April. Doesn't mean it has to do it. The word is often. Going back 15 years, I think it's got 15 years according to the more research of having done that. Now, does that mean you're getting short here waiting for that? Absolutely not. Again, you've got to put things in your mind. I spend the mornings reading for my morning subscriber people, and I'm putting out updates talking about markets. So I have to have these facts ready for them, and you end up like a mini encyclopedia because it's fresh in your mind. But you're in an uptrend. You had a breakout to the upside. Watch. Right here yesterday, and the question was, would it follow through? I'm sure I would have said that. Well, it is following through. So I don't know where this market wants to peak, but it's caught everybody under it now short. It doesn't have to end here. This can go a bit further if it wants. It's only 2 days over the Bollinger Band. It is overbought, not yet embedding, and not even trying. You don't have both numbers over 80 just yet. So yes, overbought. I'm not telling people, I would never say buy over a Bollinger Band or sell under one. You won't catch it. If I do it, slap me. But what I am saying is it could be similar to this. When you got that pump out of this sideways action and ran a bit, wouldn't surprise me. In the coffee, keep your eye on the embedded reading. I've been a broken record here saying a market that goes from 140 to 95 roughly, I'd rather walk away. I mean, it can go lower, but the first reaction could be brutal. I'm not thinking it's going to be so brutal now. If it wanted to rally and the shorts were scared, I think they'd be pumping out. Now, we know that when the Chinese go back to work, and they're doing it in staggered amounts, but they are going back, well, the coffee shops will gradually reopen. Life gets somewhat back to normal. The government's ordered people back to work in certain provinces. I mean, you've got to get the economy going. So I don't know. I'd be somewhat cautious here. In the cocoa market, we talked yesterday. You had 2 days in a row over the upper Bollinger Band, right? Well, overbought. You don't stay too long over a Bollinger Band. You generally pull back in. You did it today, similar to what I'm looking for sugar down the road here. Is that bearish? No. This is still a sign of friendly market. It's got higher lows, higher highs, but it got ahead of itself. It got over that Bollinger Band. It's pulling back in it. In the cotton market, we have divergence here. We have downside momentum trying to correct. Now, did this market embed? Let's take a look. Both numbers here were under 20. On this day, both are under 20. On this day, they're not. So it didn't embed, it just got oversold. So it doesn't have to go to the 18-day average. It could, as it wants to work itself out of being oversold. What I do see is a lot of support now coming in at the lower Bollinger Band and the 100-day average at 66.30. The swing line up, bias down, the market's out of sync with itself. In the meat markets, still working its way to the downside. Trend down, embedded reading. You know what I'm going to say. When that takes place, put your blinders on. You're just looking to be a short seller. In the feeders, same thing. You got to keep your blinders on. When you lose the embedded reading, you want no part of the short side because that's when momentum's lost. But until it's lost, hey, it ain't lost. And what about the hogs? Well, this lost its momentum. Right over here. So no, this market, while it's pulling back, in my theory, it still owes getting close to the 18-day average of closes. Doesn't have to do it, but it's also out of a downtrend. It's got higher lows, higher highs, bias down, but I pay attention to that. Until this market decides how it wants to work off that oversold condition, I think there's more opportunity that it tries to make a run there than it doesn't. That's all that I could say with it. You know, one of the things we try to do here is give you a lot of the information as to what's going on, and there's plenty going on right now. We're in February 11th. You do realize we're going to talk March planning intentions very shortly. And for those of you that trade the grains, for those of you that are the meat people, looking at what is China doing and so on, our staff writes on it, and they write on it in a major way throughout the whole trading day. We talk about world markets. We talk about weather in world markets, what's going on, where they're going on. You got Brazil's crop coming up. You got other parts of South America. Where do you get that info? We offer it in our reports. So how do you see this? Well, if you haven't, we'd like to put it in your hands for free to show you the reasons that we have clients to come with us for this information. You can get it by going to www.iraepstein.com. Click on free offers. You'll see the offerings there. Choose what you want, and away you go. I'm Ira. You have a good day.